Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at 3 stocks that are perfect 10s. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Like I said, today we're looking at stocks that come in as perfect 10s. Now that means they are ranked a 10 out of 10 on the TipRanks Smart Score, which is a system that ranks stocks based on 8 different unique factors. A perfect 10 score means that they are the most likely to outperform the overall market. On top of this 10 out of 10 rating, these stocks also come in with strong buy ratings from analysts and some pretty attractive double-digit upside potential. So in today's video, we're going to take a quick look at what these companies do and how the analysts are feeling about their stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now, I came across these 3 stocks today using the TipRanks Top Smart Score Stock tool. Using this tool, you can see how top Smart Score stocks have performed compared to the S&P 500, and then sort stocks based on their Smart Score rating, including factors like market cap, sector, and how long they've maintained that top score. So from that list, the first perfect 10 stock we're looking at today is PennyMac Financial. Their stock trades under the ticker PFSI and is currently priced at $67.67 per share. Their 10 out of 10 rating comes with bullish blogger and news sentiment, positive technicals, and increased hedge fund activity. PennyMac Financial is a specialty financial services firm. The company has been in operation for 14 years and been a publicly traded company for 8. They are number 2 in production and number 6 in servicing. They also manage PennyMac Mortgage Investment Trust under PMT, which is a publicly traded mortgage REIT. They operate in 3 business segments: loan production, loan servicing, and investment management. They have a correspondent aggregation of newly originated loans from third-party sellers and consumer direct origination of conventional and government-insured loans. They're also a major loan servicer for Fannie Mae, Freddie Mac, and Ginnie Mae. Their most recent quarterly earnings report came out at the beginning of August. Their net income was $204.2 million for diluted earnings per share of $2.94. Their earnings reflected continued strong production and core servicing results, partially offset by net MSR fair value declines. They repurchased 2.6 million shares, and their board of directors approved an increase to their stock repurchase authorization from $1 billion up to $2 billion. Their next quarterly earnings report is coming up soon on November 3rd, where analysts are forecasting an earnings per share of $3.43. The PennyMac Financial stock does have 5 current analyst ratings, and it does come in as a strong buy based on unanimous buys. The average price target comes in at $94.20, which would be an upside potential of 39%. The most recent rating came in just 9 days ago with an $85 price target, which would be an upside of 25%, while our high-end target is a few months old at $109 for an upside of 60%. Our second perfect 10 stock is HIBB Sports. Their stock trades under the ticker HIBB, currently priced just shy of $80 per share. With their perfect 10 score, we have seen a slight decrease in hedge fund activity, but an increase in insider activity and very positive TipRanks investor sentiment. HIBB Sports is an athletic apparel store that started back in 1945. They've now grown to over 1,000 stores. They provide customers access to coveted footwear, apparel, and equipment from top brands like Nike, Jordan, and Adidas. Their latest strategy includes focusing on inclusive consumer personas. This includes the streetwear hound, fashion titan, basketball obsessed, sports style fanatic, and the alpha jock. They've been refreshing all of their HIBB locations with their new store design in about 100 HIBB stores so far, but are also focused on growing their digital commerce as they've seen a rapid growth here with a compound annual growth rate of 65%. Their second quarter earnings report came out at the end of August. Their Q2 comparable sales did decline 6.4%, but they saw a 2-year comparable increase of 72.8%. Their earnings per diluted share came in at $2.86, well above consensus, and they had an operating income of $61.5 million. Their next earnings report is coming up on November 11th, where analysts are forecasting an earnings per share of $1.59. The HIBB sports stock has 5 current analyst ratings and comes in as a strong buy based on 4 buy ratings and 1 hold. The average price target comes in at $123.40, which would be an upside potential just over 54%. On the low end, we do have 1 hold rating with an upside of 25%, and on the high end, we have a $152 price target, which would be an upside of 90%. And the third perfect 10 stock today is Energy Transfer. Under the ticker ET, they're currently priced at $10.08 per share. With their 10 out of 10 rating, we do have a decrease in hedge fund activity, but an increase of nearly $30 million worth of insider activity, along with positive technicals and fundamentals. Energy Transfer is one of the largest and most diversified midstream energy companies in the country. Approximately 30% of our nation's natural gas and crude oil is moved on their pipelines. In 2020, they spent $462 million to maintain and improve their assets. Their core operations include complementary natural gas midstream, intrastate and interstate transportation and storage assets, crude oil, NGL, and refined product transportation and terminaling assets. They own and operate more than 90,000 miles of pipeline and associated infrastructure in 38 states and Canada, with a strategic footprint in all of the major domestic production basins. They also had their most recent quarterly earnings report come out at the beginning of August. They had an adjusted EBITDA of $2.62 billion, with excess cash flow after distributions of $980 million. Their earnings per share came in at 20 cents, which was a bit below analyst expectations. Their next earnings report is coming up on November 2nd, where analysts are forecasting an earnings per share of 27 cents. The Energy Transfer stock also has 5 current analyst ratings and comes in as a strong buy based on unanimous buy ratings. The average price target comes in at exactly $14, which would be an upside of nearly 39%. On the low end, we have a couple price targets at $13, which would be a nearly 29% upside, and on the high end, we have 2 ratings at the $15 price point, which would be growth of 48%. So there are 3 perfect 10 strong buy stocks. Of course, I always love hearing from you guys, so make sure to leave your thoughts in the comments down below. Were these companies already on your radar? Were some of the names new to you today? And what do you think about their stock's future growth potential? Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. You need to always make sure you're doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.